Hey people, how you all doing? Listen, yesterday I'm in my Team Mayweather t-shirt, although it doesn't have his name on it. This is just mine. I just wanted to represent, with the hoodie that he has on, how he does the hood and puts that on. But yeah, man, he did a good he performed very well. For those of you that watched the fight, I did. I had a great time. But listen, today we want to talk about something different. I want to show you how to use the life insurance cash value to invest in the foreign exchange market and also in real estate, to use it to invest in real estate, because so many people ask me all the time, man, I want to invest money, I want to do this, I just don't have, and I still want to protect my family, I still want to have life insurance to do it. How can I do both? Okay, which makes sense, because you just don't want to jump out there and get into stuff that you don't really understand, because that's what most people do. They don't understand stuff and they jump in. Most people don't understand their 401k, they jump in because somebody told them to. Well, let me see first. Let me get online real quick and make sure we're broadcasting everywhere, so that you all that are on Facebook and all the social media, so you could see me, and make sure you are at the same time, sharing this information. We're gonna wait for some more people to join us, and please, if you have a what I call it, if you have a comment, a question, make sure you type it in the box for me, because I definitely would appreciate that. So we could and share the love, share with your friends, your family, people that let them know that we're here. We're educating. It's time to talk about life insurance, using life insurance to invest in real estate, using it to also invest in the foreign exchange market. But at the same time, how do I protect my family while I'm doing that? So I don't have a lot of money, because I get those emails, those text messages, and for all of you that are leaving messages on my inbox, I totally appreciate you. Thank you. Sending me messages, telling me, hey, Douglas, I appreciate what you're doing. And those of you asking questions, I definitely appreciate you. Make sure you continue doing that, because that's the way that motivates me to do what? To continually help you and continually get you performing to the best part. So what I want to do, I'm going to quickly just again share and like. Of course, if you have questions for me, I'm kind of monitoring, three computers as we speak, to make sure that everybody's gonna get the benefit. Okay, so give me a few. We're gonna wait for some more people to join. I'm not gonna be on here for long either, because I'm not gonna hold you all tight. But we're broadcasting on Facebook. We're broadcasting on what they call it, Periscope. So those of you on there, we're also broadcasting on YouTube. So for all my YouTube people, make sure you leave a message if you have a message for me. Um, you know, comment. At the same time, do what? Make sure you subscribe to the YouTube page. Do that. It's very, very important, because I have a bunch of new contents coming out that I definitely don't want you to miss out on. So make sure you do that for us, okay? All right, folks, I'm going to jump in there real quick, and I'm going to be multitasking. So bear with me, of course. Bear with me. So let's go into the first thing. So what I want to do, my topic today is using life insurance cash value to invest in Forex and real estate. Other people's money. Never use your money. Always use the insurance company's money. So I'm going to talk about that, how you could do that, because it's so important. Hey, Stephanie, how you doing? Awesome. I'll definitely do that. How you doing, Stephanie? Thanks for joining. Hey, Kingsley, Rike King, man, how you doing, bro? All right, folks, let's do this. So I want to share this real quick. So let me bring that page up for you. While you're multitasking, folks, it's kind of. So here's one of my superstars. She posted this. She went to sleep. She and her husband, they trading. They're learning how to trade forex. So this was her first live trade, her first one. And look at how much she put in, 25 cents, and she made $97. Wow, that is phenomenal, folks. That is awesome. First trade, $97.25. So not a lot of money, but you know what, man. So we're not saying everybody's gonna get the same results, of course, but you know what is I mean, I don't mind losing 25 cents if I lost it. It's not a whole lot of money to lose, but guess what? It worked out. 25 cents made $97. So let's talk about how you can use life insurance to perform. Yes, Sunshine, that's you. Awesome. Yeah, Sunshine coming. She's online right now. I know. She says enough for her. That's right. Don't worry. You're gonna do more. But check this out, folks. Let's look at this. So let me show you something with life insurance. Let me bring that up real quick. So here's someone that says, you know what, Douglas? I do not have a lot of money. I just have um $5,000. That's it. I have $5,000 in my whole life. I received that money. A family member gave it to me. I inherited it. I just want to, but I still want to do something. So I'm just using a 45-year-old guy. I said, okay, this is what we need to do. And this is just an example, folks. So just bear with me. So what we did, we'll take the $2,000 from his 5 grand and buy life insurance just in case death happens. His family will get a check for $120,000 right away. Immediately, they'll get $120,000. See that? You put in 2,000, your family gets 120,000. So he puts in 2 grand for the first year. That's it. Just out of his 5 grand, he deposits $2,000 to protect it, just in case nothing happens. Life happens. He gets hit by a bus, right? Now, the other $3,000, he decides, you know what? I want to get into investing. I want to do something different. I don't want to invest in the stock market. I'm scared of that. And but I want to invest in Forex because I've heard you talk about foreign exchange. So the first thing we do is we say, okay, well, you know what? You could do two things. You could one, go directly and contact these brokerage houses and start investing. But what am I going to invest in? I don't know what I'm going to invest in. You could go to TD Ameritrade. I don't know any of this stuff. I don't understand it. Okay. Well, you need to get taught how to invest, right? So there's a company called iMarkets Live. So I found out about this company and it was exciting. I liked what they do. So, but this is what they teach you. I mean, it's an educational company, okay? There's no upsells. They provide all the tools that you need to understand trading in the foreign exchange market. There's FX signals live. We're gonna go into that in a minute. Live training room, harmonic scanners, trading education. So you and guess what? Because I've seen so many companies charge $6,000, $7,000, $8,000 to teach you how to trade. I've seen people pay $10,000, $15,000 to do that. But this company, guess how much this is? $235. $235. Okay. That's it. That's all you gotta pay. So this guy takes his $235. Remember, he has $3,000 left. He bought life insurance for his family, and he takes $235 from the $3,000. How much he has left? Well, he got $2,765 left. And there's a monthly fee, of course, to have access to all this back office. So here's the back office. So we won't go in there when there's basic 1, basic 2, basic 3, and all. As you get smarter in the trade, you get to move up in classes. So there's history of Forex. So you want to know the history, because I'm a believer. You never want to start jumping to anything unless you become an expert. You start reading, you start understanding. You need to understand what you're investing your money in, what you're going in. So you need to understand what is the history of Forex. So this is what you pay that $235 for. And then $185 a month as well gives you access to other things. Now, market participants. What is Forex? What is traded Forex? When to trade Forex? Buy versus sell. When do you want to buy? When do you want to sell? So those are some of the things that you get. Then you come in and, for those of you that love harmonic scanners, you could have the web scanners. So many information that you can take your time and learn. You don't have to jump in, but take a week, 2 weeks, to learn it. And they have demo trades. And then go in here, take the other $2,000 left in your account. Because remember, you've only spent $235 plus, I'd say, another 185 times 3 three months. So give yourself 90 days, because 90 days is a good time to say to yourself, you know what, if whatever happens, I'm going to give it all my best for 90 days. If in 90 days I don't see results, then hey, you know what, it's okay, you tried, right? Most people fail in life because they never take the first step. So don't do that to yourself. So give yourself 90 days. The company says, pay us 185, have access to all our training platform, access, full access, so you could learn. So guess what? Instead of watching, you know, Power and what's the other one? Empire or the Game of Thrones. Instead of doing that, take your time and start studying. And you know why I like educations like this? Because the educations like this is the kind of education that you get paid a lot of money. Okay, so many people spend $70,000, $80,000 a year going to college, right? And they still come out never making $20,000 a year. So sad. But here you could go in and do what you do and study and read and learn. I mean, there's videos and they're not that long. 1.37 seconds, you finish. 37 minutes, you're good. So check this out. So that's all on that. But there's a ton of information on here. This is what your money, that 235 does. So now the other money that you have, the $2,000 that's left, or 2,900 or whatever amount, you go in here and you open up an account with one of these brokerage houses, or Ander, or it could be Nadex. We're not going to promote anyone, whichever one you like. Go to them and open up an account. Set up an account, and then once it's open, we'll show you how to link it up to the IML Live. And you also get let me show you this. Actually, you also have an opportunity to have everything on your smartphone as well. You could download a lot of this stuff on your smartphone. So if you're on vacation, you could do what? Trade and make money for your family. So now let's get back to the insurance part. How do you mix this up with life insurance, right? What do you do? Okay, so let's go back here. So this guy decides to put in $2,000. That first year, he takes the 90 days commitment. He commits, gives himself 90 days, no distraction, and says, I'm going to do everything it takes to be successful in this. And I'm going to give myself 90 full days. And he goes to work. His first year, he makes money in his FX trade. He's like sunshine. He goes out and he says, you know what, I'm going to go ahead and I put in 25 cents, I made $97. Man, what if I did more? $250. How much will I make? And he just goes in and he takes time to invest. Now remember, he already bought a life insurance policy, so it's not a big deal. He's paid for the whole year $2,000. Well, the next year, let's say he has about $12,000. This is just an example, sitting in his foreign exchange in his Oanda account, because again, he's sitting right here in his, maybe he has an Oanda account. He's sitting right there with his brokerage house. He has 15 grand in there. Well, he says, well, you know what? I need to fund my life insurance because the premium is due, because he pays every year. Well, the benefit of life insurance that I love so much. See right here, he put in $8,000. How come he put 8,000 in? Remember what I've taught you guys in the past about minimum and maximum. Well, now he's able to max fund it. He says, okay, I'm going to put in the 6,000 because his maximum, because of his age and the coverage he bought, the maximum is $6,000 a year. And the previous year, he wasn't able to put in but $4,000. I mean $2,000. So now he doubled up and he puts in the amount plus the new amount that he didn't put in. So that's $8,000. He puts it right in there. Let me see if I can make this a little bit bigger for you guys, man, so you all could see. All right, cool, man. Technology getting too big. All right, let me use this guy. All right, cool. So you could see it, right? So $8,000 is what he put in. So now he has $8,000 in his account. He has $8,515. Now let me show you something. Let me go here real quick and pull this up. So this is what I'm talking about. So here, this is his foreign exchange account right here. It's risky. That's why it's in yellow, and it goes up and down because again, there's risk involved. when you invest in the stock market or the foreign exchange market, there's risk, of course. You gotta be careful. That's why I don't like using my money to do any of those things. Even real estate, there's risk involved in real estate as well. So he started the first year, he made some money, boom. So he made money there. So by then, his account, the first year, remember, he only put in $2,000, so he didn't have any cash value. So the insurance company said, well, we ain't giving you no money because there's no cash value yet. So now he decides to go what? Take some money out of his foreign exchange account and put it. Why is my marker not working? Let's see. Let me get my marker up here. Let me get my marker up here, folks, because let's get it up here. Okay, I know what I did. All right, you okay? Got it. Let me So he takes the money from here, and he decides, you know what? I'm gonna go ahead and put the money in my insurance policy. So he moved the money from his risk account and takes $8,000 and dump into his life insurance contract. So that moves off his insurance policy to that value right there. Let's make it 8,000 right there. So that's what we're seeing right here. When we look at this, so now in year 2 he has $8,000. Now the insurance company is saying, well, if you need money now, we could give you $5,579 from your account if you need it. We could loan you our money, so you could borrow against it. So how does that look? This is what happens. So now he could go in and borrow against his policy. So he's not touching his money, he's touching the insurance company money. His account continues to grow little by little because he's paying his premium every year with interest. He's making money, plus he's paying his premium. That continues to grow. Okay, so that's what we see right here. Year 3, he didn't put 8,000, he puts in 6,000, his regular maximum premium. Now he has 14,000. 11. He continues because some of the money is paying for life insurance and some is earning interest from the insurance company. So now let's look at what happens. Let's fast forward. Now in year 4, when he's 48 years old, he goes and he says, I want to take out a loan because I have an opportunity that just came about in some deals, or maybe he just wants to dump more money into his foreign exchange. But let's use real estate this time. He says, I have some money, I need to take out $10,000. So he takes a loan from his insurance policy for $10,000, and the insurance company gives it to him, and they call it annual income. So by it being annual income, guess what? They borrowed against it. See that? $7,000 is what is left in the insurance company's bank account. The insurance company is saying, we'll give you the 10 grand, leave your 20, let it continue to grow. See that how it's growing? Continues to grow. And he didn't have to pay the money back for a while. See, he's still paying his premium. The insurance company charge what they call interest only. So he takes the 10 grand to invest in real estate or whatever he wants to do. Again, we come back to our picture. His account continues to grow, continues to grow, continues to grow. And now he borrows against it. He takes out $10,000. He takes the money to buy real estate, to invest in somebody's tax lien or somebody else's foreclosure. He puts down $10,000 to do that. And he takes a loan against his policy to do that. Now, everything works out great, in real estate, market is great, or maybe it took him a while. So the first few years, year 1, year 2, year 3, year 4, year 5, year 6, year 7, he didn't make a single payment because he's waiting to see, maybe he didn't sell the property. I don't know. Or he sold it, reinvested. See, one of the good things about life insurance is this. This doesn't show up on your credit report. Let me say that again. It does not show up on his credit report. So he didn't even have to make that payment back for 7 years. In the meantime, he still has access to $48,000 if he needs it. But let's say his real estate was doing well or whatever. Life happened. Let's say worst case scenario. He didn't have any money. That property was a bust or whatever, and he couldn't do anything. He could take another loan out. The insurance company saying, "Listen, we could give you another money for nine. We could give you 19,000 in year 3." See that? He hasn't paid back the loan. Where are you gonna go in America and take a loan for $10,000 and come back and get another loan? Nowhere. I don't see anywhere in this country you could do that. But the insurance company saying we could give you additional money if you want it. So now, at age 55, he decides, you know what? I made some money now. Let me start paying back. And he puts back 2,500, 2,500. So in 1, 2, 3, 4, 5, 6 years, he's done. His account is no longer used as a collateral. He's back to normal. Now he could take out 140,000 if he needs it. So let's use my picture again. So now they take the lien off because he's paid off the loan. Now his account value has grown. Now if he needs to take additional money, the insurance company will loan you up to that amount if you want it. If you need it, we will give you that money. His real estate is also grown. Let's say now he has multiple property. Now he has real estate investment. Now he has Forex money. I mean, but folks, you see what I mean? He has all kinds of investments going on. He has money in the foreign exchange, or he has money in the real estate. All of them are right here. So in the yellow tank, as you can see it. But his cash, his liquid cash, if you notice, it says safe. Why is it safe? Well, because any money that goes into life insurance, if it's properly written and properly owned, guess what? No human being can take that money from you. See, people can take money from your savings account. They could put a lien. Even those of you that have LLCs and all that stuff, it's still tied to your social security number. They could still put a credit lien and come after all that money. So once you decide to, take action and want to be a student and let me teach you some more, then definitely contact me. Let's help you structure yourself properly, so now you can be able to properly own your life insurance policy in the way that it could benefit you, so that it's not owned under your social security number, so you're not the owner. See, a lot of you have stuff under your social security number and you're working around there talking about your wealth creators. But let me tell you something about being a wealth creator. You gotta be able to protect your money properly, so that if anyone should sue you, they cannot come after you. If anything is tied to you, they could come after you all the time. See, any of my policies that I own, I don't own them. A different entity owns my policy. So somebody could sue me all they want. They could come after, they can't get any because I don't own the policy. It doesn't belong to me. It belongs to a different entity. And I'll share that entity with you. Let me open up a page and show you something that the entity is approved by the IRS. See them? So the IRS says income tax return for estates and trust. See, this is on the hands of the federal government. This isn't my creation. This is the website, the federal government. This is their website. See that? 1041 tax form. See that? So again, but this is a totally different conversation. If you're interested in having that conversation, we can definitely do it, because you need to know how to do this, how to be able to do everything you're doing. Invest in, foreign exchange if that's what you want to do. Be a trader. How do I do it with some of these entities that the IRS is talking about? Some of you have never heard of this 1041, have you? Well, I'm sharing it with you today for the first time. See, this is powerful. So the income deduction, gain, losses, extra of the estate or trust, the income that is either accumulated or held for future distribution of this recurrent beneficiary. Go and read up on all this, folks. The instructions are on there. Doesn't mean you're going to know what to do with it, but it's good to read it and get education before you contact me. Because I want you to be fully aware, so you're not just doing stuff. So let me see if I have any question on here. Awesome, Sunshine. That's great. Yeah, Haki. Yeah, Haki definitely was the referral. I know. Any questions for me? Let me see if I have anybody on YouTube that have questions for me on here. So, folks, those are the kind of things that separates, you know, people that are making it work and everyone else. So you got to always stay connected, stay in the know, because when it's all said and done, you need to be in the know. Because if you're not in the know, somebody's going to be taking advantage of you. And I want you to be fully educated about whatever it is that you're trying to do when it comes to building wealth, protecting your wealth, all the stuff that you have to do as an individual, because somebody's out there interested in taking your money from you, and you got to protect yourself. The IRS has created the situation. They have laws and rules and regulations. You just got to follow their rules. If you don't follow the rules, then you're going to get yourself in trouble. So make sure you follow the rules properly and properly protect yourself. One thing about life insurance that we love so much is the fact that life insurance has been around forever. Most people don't even realize how powerful life insurance is. But they think life insurance is just for death. But you know what? It has so much protections on it. A lot of protection when it comes to life insurance. So let me show you one last thing on here, and then we'll call it a night. So when we click on the risk part, let me open this up for you. Okay? Because a lot of you, these are the benefits that you want your plans to have. Tax deferred growth, tax-free distribution, competitive rate of return, high contribution, additional benefit, collateral opportunities, safe harbor, no loss provision, guarantee loan option, unstructured loan payment, liquidity use and control, deductible contribution. So let's look at some investments that so many people are putting, because a lot of people jump into stuff and they don't even know what they're investing their money in. So investing in real estate. Okay, let's look at that. So when you invest in real estate, what is happening? How many benefits do you have? You have tax deferred growth, of course, because remember, when you sell your property in a real estate transaction, especially if it's a residential home and you're married, the IRS allows you up to 500,000 couple to be able to, you don't have to worry about paying taxes on that, which is awesome. Comparative rate of return, again, that's a situation you got to decide on, because depending on how you're investing, high contribution, additional benefit, collateral opportunity. You can use your real estate property as a collateral. But look at the consideration things you need to consider. Primary focus on return potential. It's market driven. Access to capital usually limited, because you got to get permission from the bank. Ongoing potential for additional cash flow requirement, of course. Things always happen. Potential for leverage through financing options. And then some of the real estate investment trusts make quarterly income payments, which are taxable if it's not held in an IRA account. All right, so that's one. Now let's look at other investment. Some people invest in mutual funds, but they don't even know what they're doing. They just jump in the mutual fund market. How many benefits do you have in straight direct mutual funds? Competitive return, of course, you could make more, right? High contribution, right? Liquidity use and control. It doesn't have a lot of, it only has 3 benefits. But so many people have their money tied up in that. Primary focus on return potential, market driven, subject to wide volatility, contribution subject to suitability rules, possible benefit of tax deferral, tax-free, distribution, collateral opportunities, and deductible depending on underlying account. Depending on how you structure that account. If it's a Roth IRA or it's an IRA mutual fund, then yeah, you could get some of these benefits. Now remember, if once you call it a Roth IRA or IRA, traditional IRA, then there's no more high contribution. Now you're limited on how much money you could put inside of it. So the maximum you could put in a Roth IRA as of today is $5,500. $5,500, and if you pass, that's all your family gets. So think about that. Precious metals. So many people are jumping into that bandwagon, and they think that's something that you could use for wealth, build wealth and stuff like that. So let's look at the benefit of precious metal. So it's tax deferred growth. It doesn't have all the benefits that you need. It's liquid because you could sell it. high contribution, competitive return, issues with storage, then your money could be gone. You know, you put it somewhere, so you got, because a lot of people that have precious metals, they always hiding it, always hiding. Theft concerns, subject to wide volatility, conversion rate fluctuates. See that? So again, you need to know what you're getting into. So many people jump into stuff and they don't understand. They don't even educate themselves. So that's why I do this information stuff here, because I want you to be fully aware before you jump into variable annuities. Let's talk about that. So many people do have that too. What benefits you have? Look at that. Only 4 benefits. Tax deferral, comparative return. It's not tax free. High contribution, additional benefit. Whenever we say high contribution, that means there's no limit on how much you could put inside of it. Okay? There's no limit. You can put as much money as you want. But look at that. Value subject to market volatility. Defer taxes until withdrawn. So when you take the money out, then you're going to get hit with taxes. Tax penalty and surrender charges for early withdrawal. Gain is taxed as ordinary income upon withdrawal. Often used to provide steady income stream during retirement. Can provide additional benefits like long-term care and life insurance, of course. Possible benefit of tax-free distribution and deductible contribution. So you see that now. So now let's go to the green side, the green guy, the green money, you know, the money game, the money team, right? You see, immediately has a death benefit right there. That's why we like life insurance, because of the death benefit and all the cash. So let's look at the benefit in there. What does that give us? Let's look at that. When we pull up life insurance, actually before I pull up life insurance, let's look at fixed annuity, because I know so many people are also, you know, using that as a way to save money. People ask me about annuities all the time. Well, you need to understand what annuities is. Okay, what do you have? What benefits you have? Look at that. Not that many. Okay, tax deferral, yeah, but there's no tax free. You know, you can put as much money as you want. So a lot of insurance agents make a ton of money selling annuities, and you know, and that's why they love those rollovers. Roll money from a 401k into an IRA annuity. They love it. You know, different. I'm gonna have a conversation about that another time, but not tonight. Defer taxes until withdrawn. Tax penalty on surrender charge. You see, I hate this. This right here, withdrawn. When you take your money out, you gotta pay taxes, right? You deferring it to pay later. I hate that. I hate penalties, and I hate all this stuff. You know, so let's look at this other guy though. That's the only one that has all the benefit listed. Now, I could show you how to turn this on. See the one that says deductible contribution? Yeah, this is where I'm the genius in this one here. A lot of insurance agents don't even have a clue how to make this deductible. So if you're a business owner, if you're an individual, and you want to know how to add deductible contribution, that means you're going to add money that you didn't pay taxes on inside the life insurance contract and still get it out tax free. Woo! This is what makes me different. This right here, this is my ace card, my secret weapon. You know how Floyd Mayweather has that secret weapon that he uses? Yeah, this is my secret weapon when it comes to insurance business. That's why I'm the guru when it comes to life insurance. So if you're trying to get life insurance and you're dealing with whoever, you need to contact me. And if you're an insurance agent out there, you're looking for an opportunity and you want to learn how to do this well and help your clients well, come on the winning team. Let's help you do that. So here's some things to consider when it comes to life insurance. Riders are optional and may be available at additional costs. So there's different riders you could add to life insurance, like waiver of premium, disability income rider, you know, long-term care rider. You know, that costs additional money, but that's a different training. Some of them pay dividends, like a whole life policy pay dividends. Once dividends are paid, they become guaranteed cash value. So again, you know, we have policies that pay dividend, and then some don't pay dividend. So we'll have a conversation on another training. Cash value gross tax deferred. That's the money. You're not paying taxes on the interest you're making on it. Loans loans a contact feature. Contract is unilateral and provisions can only be changed by owner. So guess who the owner is? You. Loans reduce access to available cash value by the amount of the loan. So when you take money out, so let's look at that example that we showed earlier. Remember, let's go here. So remember, This guy took a loan out, right? So if you notice, if he passed away today at this age, where he has cash value of $32,000, his family will only get a check for $142,328. That's the first amount, which was 118 starting off, plus the $26,000 added. That gave him that. So the insurance company takes out whatever he owes them plus the interest. And remember, this is an interest only loan. So that's what they mean by that. That's what we mean by when you take out a loans reduce access to available cash value. And in this case too, this example that I'm using a index universal life option B, which is the increase in death benefit. That's what this is. This is index universal life option B. That's why if you notice, the death benefit is increasing. If it was a whole life, it would be a different conversation. It will be a fixed face amount, and then they'll subtract the death benefit, the cash value, from the death benefit. So, but that's a different conversation. We'll have that, when you decide to, and we'll show you which one makes sense, either whole life, universal life, or index universal life. But we don't have a favorite. We just believe in educating you, and you figure out which one makes sense for you. Death benefits are paid income tax free and are reduced by outstanding loans or withdrawals. So if there's an outstanding loan, they're going to subtract it from the death benefit. And if you took withdrawals out, that's why I always believe I like the loan part, because when you take a loan, you're taking a collateral position against your policy. You don't, when you do a withdrawal, you're withdrawing the money. You're not using it as a collateral. So loans are always a good thing. Cash value deficit during initial capitalization funding period, because there's not enough money during the first start of it. That's why if you remember, in the first year, because this person wasn't funding it properly, they couldn't access money from their plan. They only had $1,240 in the plan, in the accumulated value, and they can't access cash value $0. So just wanted to kind of highlight that real quick so you kind of see that. So let's go back here. So what we're talking about, whenever you access money from the insurance company, because if you do a withdrawal, this is what you've done. You've withdrawn money from your account. See, I don't like that situation. I hate taking money out of my account. See, when you take money out of this, you do this. Then after a while, you don't have no money in there, right? So that's not a good thing. I like taking a loan, use somebody else's money, use my policy as collateral to do what I need to do. And it continues to grow with interest. And then when I pay the loan off, guess what? There's no more collateral position. My cash is all back to where it's at. So, what about 401ks? Oh, somebody, okay, thank you for asking that. Let's look at that real quick. 401ks. Would it be let's look at this. Let me see if it's in here. So the question is, what about 401k? All right. So 401k account, okay? What a 401k, you have tax deferred growth with your 401k account, but you don't have tax-free distribution. And when it comes to taking a loan from a 401k, what you're doing when you pay that loan back, you're paying with after-tax dollars. So you get taxed again in the future. And you're deferring your taxes. You didn't pay no taxes on that 401k money that you put in. You told the government, wait a minute, I only want to pay I don't want to pay taxes today. I want to pay it in the future. Well, when you do that, what I say is you're postponing the tax to a future date. And when you do that, you don't know what the tax bill is going to be in the future. So what happens in that situation is you end up paying, you depend on the size of your 401k account, you might end up paying more money. So again, the question you want to always ask is, what is my tax bracket going to be when I retire? Which most people don't have a question. They don't know the answer to that question. And the other thing I don't like about 401k is this. The fact that the government has a limit on how much money I could put into my account. See, I don't like that situation. I want to be able to put whatever amount of money that I want into an account. I don't need nobody telling me the limit. So right now, as of today, the maximum you can put into a 401k is $18,500. That's the maximum you can put in as of today. So if you're making $300,000 a year, W-2 income, so the government is saying the maximum you could put in is 18. How about if you want to put $50,000 away, $100,000 away? No, you can't. You can only put in 18,500. See, that's one of the things about life insurance that I like, is the fact that even though the government put a limit on how much you can put in life insurance, but here's the benefit: you get to create what your limit is. You decide what your limit is going to be in a life insurance contract. You could say, you know what, I want to put away $100,000 a year in my life insurance every year. Then we'll design it to make sure it could handle that type of money. You know, that's the key. You create the limit that you put in. So, but again, when you're ready, just, I hope that helps you, Joseph. Good question. Hope that makes sense. What is the best life insurance policy to purchase? I mean, there's no best life insurance. You just got to figure out what company is the company you want to do business with. How are they rated? Do they specialize in life insurance and in cash value life insurance? That's what you're looking for. All company are going to do what they're going to do. They're going to pay out a claim. They will pay out a claim. So insurance companies have money. They're very strong. All of them are strong. Now the question is, are you going to be the agent that is selling it to you? Do they even understand insurance? Because insurance companies are manufacturers. They manufacture product. So there's no one company that's better than other. They all manufacture. They sell product. Just like, there's different cars out there. There's Ford, there's Mercedes-Benz, there's BMW. All of them are going to do the same thing. But how is the agent designing the product for you? Is he only designing it to benefit his pocket? Or is he designing it to make sure you benefit? So that's the question. Now, of course, I'm always available to help you structure a life insurance contract properly to benefit you. So we could talk more about that when you're ready. So finally, folks, make sure you go on Amazon and pick up a copy of my book, Creating Generational Wealth: What the Super Wealthy Know That You Need to Know. I mean, great information. And for those of you that have already purchased the book, I want to say thank you so much. Don't forget to leave some reviews for me on Amazon. Do some reviews. We appreciate that, because that's how other people are going to benefit. Do that. And with that, folks, you'll have a great Sunday. Get ready for the week. Everyone in Houston, Texas, man, I pray for you. I hope you guys recover well. It's awesome that this world is crazy, man. But hang in there. Listen to what the people are telling you. If you got to get out of the house, get out and go, seek shelter. Be safe. Have fun, folks. Enjoy yourself. Sunday is here. The year is almost over. Start planning for your financial future and take control of your family. Good night, everyone.